Hi, good morning. Thank you for joining us. My name is Ricardo Lopez. I'm the broker at Marisol Properties. I want to tell you a little bit about what we do, and the purpose of our presentation today is how to buy a house. Give you information. If you're starting out, if you need more information about how to buy a house, this is the information we want to provide. There are two sides on the transaction, and this is why we are both here. So we have the real estate broker side, the realtor side, and I'm the realtor, and then we have the lender side. On every transaction in buying the house, you have the two sides unless you're buying cash, in which case you're talking only to me and not to you.
Oh, nice. Okay. Well, that is a very low percentage.
Yes, it is.
Anyway, good morning. This is Sandra Spencer from US Bank. I have been doing lending for over 25 years. It's my passion. And yes, I want to share some really good information for whoever is looking to buy a home. And we can definitely share our experience with you today, and it's going to be really helpful.
Very good. So one of the things that I ask immediately when somebody comes and say, hey, I'm interested in buying a house, can you tell me about it? My first question is, do you have a pre-approval? Are you buying cash or are you buying with a lender? If you need a loan, you need the pre-approval, because I cannot actually make an offer on a house for you without that pre-approval. It has to go with it. Plus, you need to know how much money you can afford so that we can look at properties. And the pre-approval is that side of the transaction. So tell us a little bit more about that.
So when a person comes to me and calls me, and the first thing they just said is, the realtor asked me to call you. So at that point, my first question to them is, and I always ask this, have you buy a house before? Have you worked or are currently working with any other lender? Because you cannot be working with two people at the same time, right? After that, I proceed to ask several questions and try to understand if this person is ready or if I need to help them get ready. Because I don't just tell the person, you can buy now. My job is to tell them and explain to them, are you ready to buy? Or if you're not ready, how to get there. I'm not going to discourage you and tell you you can buy and that's it. So there is a process. Okay, there is a lot of information. I try not to give all the information at the same time because you're going to get overwhelmed. So the first thing is, what type of job do you have? Do you work W-2 for a company? Or do you own your business? Or do you work for someone but they don't take taxes, which is what they call 1099? They are specific documents that the person will need for the pre-approval, okay? The most important thing for me is that when I ask the questions, this person feels comfortable enough with me to tell me the information as an open book on their finances. That is very important, guys, that you choose a person that even though you don't know me, you feel that I know what I'm doing and that there is, some type of relationship that can start growing and you can trust that part. Because it's a very important process, but if I don't have all the pieces, I cannot help you. It's really important that you expose to me everything. And I tell the customers that. Talk to me about you. Talk to me about your last, credit history. Talk to me and why, what it happened. The credit always tells a story about a person. There's no good or bad credit. It always has a story, and it always has a way to help you. But it's really important that you engage with me on the process and that you follow what I'm telling you. If you follow what I'm telling you to do, you will get to the closing table, okay?
And one thing that I want to add to that, because it happens all the time, you have to be really honest. It's like you got to trust her, but you got to be honest, and everything is going to come out. It has happened to us that at the last minute somebody
several times.
Several times. I remember one clearly that they had a student loan that they didn't they didn't.
I actually think that's probably one of the only one or two loans that haven't closed.
Yeah, because what happens is it comes out at the end, and then they go, oh, well, I didn't think because it was during COVID and I stopped paying the loan. No, you have to say everything.
And that is heartbreaking, because we really want to help you guys. And I have a lot of experience. I can work complicated loans. I can do it. I'm very upfront with him. I can tell him, this is going to be a smooth transaction. I can tell him it's going to be rocky, but we can do it. Or I can tell him, I'm not sure how this is going to go. But if they are willing to get on the roller coaster with me, I am. I would say, and he can tell me, but I think 99% of our transactions close. But it's because we don't just, buff the customer. We're very upfront. So once this happens, okay, and we have a very positive first conversation, I'm going to request from you basic information. If you're a W-2, what do I need from you? Very basic. Your full legal name. When I said full legal name, that's very important, so I don't have to repull your credit again. So give me the name that is on your ID. Very important, okay? Your social security number, of course, your date of birth, your physical address. Cannot be a mailing address. Physical address, where you've been living, okay? And if you're W-2, I'm gonna need your last 30 days of pay stubs. Believe it or not, that is all I need for a pre-approval if you are a W-2 employee. Of course, within the conversation, we're talking as well about how much money, and this is how I ask, how much money do you have saved that you want to use for this transaction? And the reason I say that is because after that, I said to the customer, I don't care how much money you have saved. It's really, I don't care. What I care about is if you have $100,000 saved, how much of that money you really want to use for this transaction. Some people, don't want to disclose how much money they have because they think that then the bank can say, oh, he have $100,000, let's use it all. It doesn't work that way, guys. They are standards and they are caps for everything. They're caps for what the bank can charge you, for title company, for everybody they are caps. So it's very important, okay?
It's also important that the money's in the bank.
Yeah, that's very important too. I ask that questions as well. Once you tell me you have the money, okay, is that money in the bank, okay? If the customer tells me no, then there's another conversation that we have, okay? And that go, per individual case. There are ways of working things out within the guidelines, which is very important. Find someone to work with that knows the guidelines. If you know the guidelines, you can close the loans. If you don't know the guidelines, that's when the loans get stuck at the end of the loan or in the middle of the process. It's very important, okay? Information up front, get to know your lender, bring all the information to them, okay? And make sure that that person knows what they're talking about. And it doesn't bother me when they fact check me. Because a lot of people go and read and go in Google and run the news. It's fine. I don't have a problem with that. Because I know what I'm doing. And that's very important. Now, if you are self-employed, meaning you have your own business, or you work for someone, but they don't take taxes off your check. That is what a 1099 employee is, and is considered self-employed as well, okay? You need, on both cases, W-2 or self-employed, you're gonna need 2 years of employment history, okay? And I said history because it doesn't mean you have to be on that same company. It means that you have to have 2 years consecutive of employment history, okay? If you are self-employed, you are going to definitely need 2 years of tax returns. Okay? So that's very important. If you started your business a year ago and you switched from W-2 to self-employed, that's going to be a problem for a year. You're going to need to stay on the self-employed for a year more and do the taxes. I can do it if you actually go back to W-2 full-time. I could do it. Why? Because I can use the income from W-2 and I can use the employment history from self-employed part.
There are so many times that you know, call me and say, hey, they're not ready yet.
Exactly.
We gotta wait another 6 months because of, you know, whatever problem, but that's one of them is they're self-employed, they need the 2 years. The 2 years is in 6 months, in 6 months we're gonna do it. And many times we go back and then we end up, you know, helping them and buy a house.
Yeah, and something, now that he mentioned that, I always tell the customer, when I give them assignments and I said, do you really, really want to buy the house? They said, yes, we really do. Just tell me what I need to do. And we have really, really good stories, a lot of them. And people go, and what I tell them is any important financial decision that you're going to make from now on, call me before. Don't call me after you do it. Call me before. I might tell you it's okay, you can do it, but I might tell you don't do it. If you call me and tell me I want to change my car, I'm going to say no. Don't buy furniture for a house that you don't have, guys. Okay? Don't get new credit cards. Forget about getting new credit. If you are on the process of getting ready to buy a house, save money, keep paying your bills on time, and whatever I tell you to do, particular to your situation, make sure you do it. Okay? Once you turn all the documents to me, that's when the fun starts. I obviously have to get your consent to pull your credit, and yes, it's a hard pull. And most of the customers get worried about that, and you know, it's really something that you shouldn't have to be worried about. If you are really looking to buy a house, you want them to do a hard pull. Because if they do a soft pull and they try to do your pre-approval and something doesn't come up on that credit, it can come up when you do the hard pull. So you want accurate numbers, and that's what I always tell the customer. Do you want me to really tell you what you can do, or you want me to just, you know, tell you anything? You don't want anything. You want something that is real. You want something that makes sense.
And it happens a lot of times on our side that we get a pre-approval from other lenders, and we're thinking that this is great. You know, they have the pre-approval and it's real. And then it turns out that other things come out. Oh no, they're not approved after we're under contract. I had one recently that I was representing the seller. So the buyer came with another realtor and they made an offer. It was under contract. A week before closing, financing fell through. How a week before? You know, because they didn't ask the right questions from the beginning. And the reason that one fell through was because they had money. We talked before, make sure you have it in the bank. They had money for the down payment, but it wasn't in the bank. They had a cash business and they had actual cash, $40,000.
So that's a great example that the lender was not inquisitive enough. It didn't ask the right questions. And I always tell the customer, do you want me to close your loan and you want me to be honest with you? And some customers, I even tell them, when I get on my professional mode and I'm talking to you, don't take it personal. I'm trying to guide you. I'm trying to tell you it has to be done this way if you want to close on the loan. And if you are serious about buying a house, I would say 98% of the people are really happy. And you know what? I'm really proud to say that I would say 90%, if not more, of our referrals come from customers. It's customers that refer customers. So if that tells you something, Ask for references. Call Ricardo, call myself, and we give you numbers. You can talk to a customer that have worked with us. We are very transparent on our process, and we make sure that you get to that closing table. And it's really important that the realtor and the lender have open and great communication. That's gonna work on your behalf all the time, 100% of the time.
Right.
So to finish it up, basically, once you give me all the documentation and I'm able to do your pre-approval, which I try to do it pretty fast and be accurate about the timing, the time frame to respond to you. At that point, we, I send an email, and I email Ricardo, and I email yourself, and I try to explain on that email not only how much you qualify for, but within the scenario that I qualify you, I'm gonna say, okay, the maximum that you can look for on a house for annual taxes is this. And that's very important. Does he have an association? Does he doesn't have an association? All that information is really important that I share with Ricardo and with the customer, because that's when he's gonna be looking at the right property for you. And last but not least, there are down payment assistance programs, and I work all of them. So if you have some money saved, but you feel you don't have enough, give the first step. There's nothing that you can lose by making a call and talking with us. We are going to help you. We are here to help. We're here to just guide you and take you to the closing table and further, because our customers become our friends. And then they bring friends over, and they buy a second property and a third property, or they refinance, and we always work as a team. So we're ready to share with you, in my case, over 25 years of experience to get you to the closing table so you can become a homeowner.
Very good. Touch on a little bit on the different types of loans.
Yeah, sure.
That affects what we do as well.
Correct. So for a first-time home buyer, the reason I usually choose an FHA loan, which is a first type of loan, the FHA loan is a loan that is guaranteed by the government, basically. And the reason is because that type of loan is more flexible in terms of the DTI. And what is the DTI? The DTI is the debt to income ratio. Basically, your income against your debt. So on an FHA loan, not only that they are very more flexible on the credit rating that you have, but I can go over 50%. And that's very significant for someone that is buying their first property, okay? The second, now that type of loan, the standards on the type of property in terms of the condition that the house is, which he's very familiar with, very knowledgeable, is very important, because there are certain standards that FHA requires that they're not required on the other type of loan that I'm going to mention, which is a conventional loan, okay? The FHA loan, to say that the last point, does have what they call mortgage insurance, which is what everybody calls the MI. And that basically is an amount that you pay monthly. You pay the principal and interest, which is the part that you pay to the bank on the main amount of the loan, basically what they lend you, the taxes that you pay to the city, the county, the insurance, and the mortgage insurance. And the mortgage insurance, they require it basically if the person defaults on the loan, then they don't lose all the money. So that's basically why the mortgage insurance is in place. And you have it for the life of the loan. So it doesn't matter if you refinance in FHA, if you do another FHA, you're always going to have, it's going to be a little bit lower the percentage, but you're always going to have mortgage insurance as your payment, okay? As part of the payment. On the conventional loan, basically, and on the FHA loan is 3.5% the down payment, okay? You can put more, but the requirement is 3.5%. On the conventional, although right now the U.S. Bank have a conventional loan that is 3% down actually, the PMI, which is the equivalent of the mortgage insurance, but on the conventional is called private mortgage insurance, is the PMI, because the investors are private, basically, who is backing up the funds of the loan, okay? So on that loan, it's a little bit more flexible in terms of maybe the age of the roof, the type of pipes. Maybe he can touch on that more, but it's definitely more flexible in terms of the standards on the property. But you're paying the same. You're paying principal and interest, taxes and insurance, and you are paying the PMI unless you put 20% down, then you don't have PMI, okay? It's considered a less risk type of loan, a more quality loan, if you want to call it that way. And on a conventional loan, after you pay 78% of the principal, you can request that PMI to be removed from your loan. And that's basically the two type of loans, and both of them can be done along with down payment assistance programs.
Very good. So let me tell you a little bit about my side of the transaction. So basically, what I do and what we do at Marisol Properties is to try to hold you by the hand from the beginning until the end. So we're going to take you to closing. We're going to help you through a very complicated process. But as your realtor, I am here to act on your behalf, to represent you, to put your needs above my needs or everybody. We work as exclusive agents. Now, what does that mean? So when we start working together, you're going to get the pre-approval, you're going to come to me, we're going to sit down and we're going to talk about the process. I'm going to explain how everything works. We're going to start the relationship by signing an agreement that says you're going to work with me and I'm going to give you all of the rights that the law requires. That I'm going to be totally honest and confidential and obedient and all sorts of things like I'm required to tell you, and I put that in writing. You, in turn, put down in writing that you're going to work with me, so we're going to work exclusively. The same way that Sandra said that you don't work with more than one lender. You work with one lender, you work with one agent. It doesn't matter who the lender or the agent with, and she worked with other agents too, and I work with other lenders. Okay, but it is very important that you get a team that knows each other and works together. One of the important things to me for a lender is that I can reach the lender whenever I need the lender, and she answers the phone when I call her. So, once she answered the phone when she was bike riding.
I know.
So anyway, say we get together, we start working, and I need to understand your needs. I need to understand what you want in a house. What is important to you? If you're buying a house as an investment property, that's completely different than buying a house for yourself. I always say when you buy for an investment, you buy with your head. When you buy for yourself, you're buying with your heart. Mm-hmm. Because it's the place you're going to live in. So it is extremely important that you tell me everything that is something that you want in a house. Is it the backyard? Are you into cooking a lot? Is the kitchen the most important thing in the house? Do you have children? Do you have pets? Is it a dog or a cat or two dogs? I mean, all of this is really important to understand. We're going to talk about that, get all that information, put everything in writing, and I work, this phone keeps going on and distracted me. I'm gonna put it over there. See, clients calling.
There you go.
I have My wife and I own the brokerage, and we work together in trying to help you through this whole process. We also have other agents. What we do is try to give you all the information that you need to make a decision, but ultimately it's your decision of the house that you want to buy. Mm-hmm. We're going to send you a list of properties. We encourage you to be out there and look at all the different places. All the information about properties comes from one database that is called the Multiple Listing Service, or the MLS. When you go, sometimes you say, is Zillow better? Is Realtor.com better? Is Homes.com better? It doesn't matter, because all that information is coming through from the same source. But I want you to be out there and look at information. Don't call anybody. Just send me the address when you're interested in a property. What am I going to do? Because we have access to the MLS directly, there is more information there that does not get shared. It's private information. And we can do screens that you cannot do otherwise. So when she was talking about FHA loans, we're going to look at properties and pull a list of properties that not only, but that accept FHA loans. Because not all of them accept FHA loans. And you were talking about that, the reasons or whatever. FHA, when you get the lender, when we go under contract, the lender is going to order an appraisal of the property. That appraisal, when it is an FHA loan, is a specific type of appraisal that includes a semi-inspection of the home. They may ask to fix certain things. Some sellers that have properties that are in disrepair or need a lot of work know, and their agent knows, that FHA is not going to be a good thing. The whole thing may fall through, so they may not accept FHA loans. The same thing with the other type of loan that you didn't mention, which is VA, which
the VA, correct.
We work as well, which is similar in terms of those requirements. Now, let me get back to the process. So, what are we going to do? We're going to go and show houses. We say, hey, this is a house that you're interested in. I take you around. We go in the properties. You go in. It is so important when you go in the house how you feel. Now, before you even get into any house, we're going to know if you want 2 bedrooms, 3 bedrooms, the price that is pre-approved to. We're going to know if it's important for the kitchen. If you want to have city water, that's important to you, and you don't want a well. Or you want to make sure that it's sewer and not septic. If you want block constructions, there's so many things that you may not think of, but we talk about it ahead of time.
Something, sorry to interrupt you, something really important that I did not touch, and I do want to say, we're going to make sure before you walk on that door that you're comfortable with your mortgage payment. That's very important. What I ask the customer, when the customers start talking to me, and I ask the questions, I'm going to feel what the target is. Every customer have a different target in mind. And 95% of them is the monthly payment. So instead of worrying about interest rates, worry about how much you're going to be paying monthly. And that's where the 50% or the 52% of the FHA comes. What that means is that you're going to have the difference free from your income. So it shouldn't occupy the mortgage payment and your debt more than 50% of your income. So that's very important, that we're going to make sure before you go to see the house, you're going to call me, or he's going to send me the information, and I'm going to do the numbers for you for that house. And I'm going to call you and I'm going to say, hey, this is what your estimated payment is for that house. Are you comfortable with that? And then he goes.
Right. So, that payment is different depending on the house.
Correct.
Because the taxes are not the same on every house. And I'm not going to go into all of those details right now, but the information, that's why some houses have a homeowners association payment. The homeowners association payments are different. Some of them are $400 a month, others are $400 a year for an HOA. So it depends, and all of that goes into that payment that she's talking about. So yes, that is very important. So you walk into the house. It could be that the house has everything. The payment you can afford. It has the number of bedrooms. It has, you wanted a swimming pool. This one has a swimming pool. You wanted a big kitchen, open concept. It has everything. And you walked into the house and you go, no, this is not my house. That is really, really important. If you don't feel it, it's not your house. And I tell people that all the time because sometimes I go, but this has everything. Yeah, but it doesn't. Now, sometimes I stop you because I have had situations in which they say, no, I don't think so. And I'm like, why? What's wrong? That wall is red and I don't like that color. No, we can paint.
I know, right?
Let's, you can
Cosmetic,
visualize a little bit. But for the most part, you have to feel the house. Now, it could be the opposite too. I have situations in which the house is not, I had one that I always mentioned that he wanted block construction. He wanted to be on sewer. He wanted city water. We saw this house, she sent it to me, they liked this house, and I'm like, that doesn't have any of those things. We went to the house, they fell in love with the house. They swore that they were not gonna buy a house at all of this. They're still at that house, they're very happy with the house. So it all depends on how you feel when you get the house. Now, say we find the right house for you, this is the house, you're in love with the house, we gotta make an offer. The list price of the house is not necessarily what you're gonna pay for the house. We're going to make an offer on that house. Now, I'm going to check the price of the house and make sure that that price makes sense by doing what we call a comparative market analysis, a CMA. By looking at that, we see if we're ready to make an offer, how that house compares, and if the price, some houses are priced very high, and I say, look, that house is overpriced, so we may want to make an offer a lot lower than that. Or it could be that the house is priced very competitive or under market, and they're looking for multiple offers. And I call, because I always do that before making an offer too, make a call and say, hey, are there any other offers? They have to tell me if there are other offers. Not the amount of the offer, they don't say that. But I know if there are other offers on the property, and I may come back and say, look, this house is priced very competitive. They already have 3 offers. We need to be aggressive. Sometimes we may offer over the list price in order to be aggressive. There are a lot of things that we do at the time of making an offer. One of the things that we work together on is sometimes Sandra says, hey, they need money for closing costs. And can you get the seller to pay part of the closing costs? Now, people say, oh, sellers pay the closing costs of the buyers. No, they don't. We just have ways of working around it. Let me give you an example. Say a house is listed at $250,000. The seller is willing to accept $245,000 for the house. Let's assume that they are willing to accept $245,000. You need $10,000 for closing costs. I can say, hey, I'm going to make an offer for $255,000. But you give me back $10,000, they still get their $245,000. But the loan is based on the $255,000.
Correct.
And that, it has to appraise at that amount.
The value has to be there.
The value has to be there. But it is a way to work out the numbers. So this is why it's important to work together, because we do that all the time.
All the time.
Now, say you're interested in this house, we work the numbers, I have to put together a contract. The offer is an actual buy-sell agreement, an actual contract. The standard contract is what we use for the most part. And that buy-sell agreement you sign, and you say in that agreement, number 1, what you are offering for the house. Number 2, what is your escrow deposit, your down payment, your earnest money deposit, not your down payment, I'm sorry, that's something different. Your earnest money deposit or your escrow deposit. The earnest money deposit or the escrow deposit is an amount that you give at the beginning. It's usually 1% of the price of the house. That's rule of thumb. It could be anything. It could be a gold watch, actually. Nobody has ever done that, but it could really be anything as an earnest money deposit.
Oh, wow, interesting. Never knew that.
The law doesn't say
We could do a later class sometime about closing costs specifically.
Yeah. So you do that earnest money deposit, say is 1%, $250,000. You put in down $2,500. $2,500 goes to as a deposit. Within 3 days, you give that money to the title company. The money has to come from your account. She has to know where the money comes from because the lender is going to know that. No cash for that.
No cash.
So if you don't have a checking account to write a check, you can go to the bank and do a cashier check that you take it out of that account, that everything is clear. Now, that money goes into that account that the title company is a third party that is going to make sure that the house is clear of liens and there's no problem. They're going to do, they are really the third party on all of this, but once the transaction starts.
Correct, and once, that's where the bank sends the money to be funded the day of the closing day. So it's very a pillar of the transaction, title company.
So when I say there's two sides, there really is a third side too, which is the title company. We work together as well. Mm-hmm. The two of us work with the title company all the time in every transaction. Now, the title company holds that $2,500 that you gave, and they put it in an escrow account. That is your money. That money is a credit at the end for closing costs. That's money that you put ahead of time. Mm-hmm. That money gets returned to you if you get out of the contract under any of the contingencies of the contract. There are some primary contingencies. Number one contingency is the inspection period. When you start, the last person that signs the contract is when the contract goes into effect. Calendar goes into effect and the days start counting. 3 days to return the earnest to put the $2,500 in our example. You have 5 days to give her all the paperwork that she needs to submit the loan to underwriting, right?
Mm-hmm. To processing,
to
then
process
to underwriting.
it, and then goes to underwriting. So you have 5 days for that, and you have usually around 10 days for the inspection period. In the offer, we say what we are asking for. Usually I usually put 10 days. The standard used to be 15. Nobody does 15 anymore. Some people want only 7 days, but usually there is that inspection period. During the inspection period, which is the most important contingency of the contract, you can get out of the contract for any reason whatsoever. You get up the next morning and say, you know what? I had a bad dream about this property, I don't want it, you can get out of the contract. They don't even have to ask anything. But the purpose of the inspection period is to inspect the property. You're going to hire an inspector that is going to go there, is going to check everything out. Now you pay out of pocket for that inspector because you're paying for the person to do the job. They're going to come up with a report that is going to say, this is all the things that are wrong with the property. And there are always things that are wrong with the property. Even brand new construction. New construction, I always recommend an inspection, which we can help in new construction as well.
Well, and they need those inspections for the insurance.
Okay, and I was going to go there too, because there are two different things that the inspector is going to do. They're going to do the general inspection, which is the one that is going to have all the things that are wrong with the property. And then they're going to do a wind mitigation and 4-point inspection, which is the inspection that I sent to you.
Correct.
That is for insurance purposes. The wind mitigation and 4 points are going to check 4 things. They are the 4 points. They're going to check the roof, they're going to check the plumbing, they're going to check the electricity, they're going to check the air conditioner. Those 4 things have to pass. You have to have those are 4 important things. Now, you could have a million other things that are wrong with the property. that we negotiate during that inspection period. Now, the inspection period is supposed to be for you to find out if you want it or not and to get out of the contract. We usually use what is called an as-is contract, which means you're buying the property exactly as it is. However, the seller knows that you can get out of the contract. And if there's something wrong with the property and you really are ready to get out of the contract, unless this is fixed, I can go and say, no, they'll get out of the contract. Now, if you want to fix it, they'll stay in the contract. So even though we're not supposed to be negotiating, it is a time that we negotiate. And a lot of times there are little things that I say, look, my client is willing to live with all of this if you give them another $5,000 towards a closing cost. And they fix it. They'll fix it after they buy the house. And that's okay. Now, there are certain things that, if it's part of those 4 points, you need to fix it before closing. If the air conditioner doesn't work, we need to get the air conditioner to work. If the roof needs to be replaced, the roof needs to be replaced because you cannot get insurance. And it's not that you don't get the loan. You don't get the insurance. If you don't get the insurance, you don't get the loan.
Exactly.
So those are things that are extremely important, during the inspection period. Now, say that you get out of the inspection period, everything is fine, we move forward. I mentioned before that the lender orders an appraisal. The house has to appraise at the value of the contract or higher. If it appraises lower, that is a problem because you're not going to get the loan. Now that becomes another contingency, because if the house doesn't appraise and you say, I'm not going to put any more money out of my pocket, and the seller says, I'm not going to lower the price at all, then we're in an impasse and you can get out of the contract. If you get out of the contract during the inspection, your $2,500 go back to you. If you get out of the contract because we couldn't reach an agreement and it appraised lower, a lower value, you can get out of the contract. Usually we can negotiate at that point because we want to continue. Now, obviously, if it doesn't appraise, when they go to sell it again, they're going to have the same problem. Mm-hmm. Now, and I've also had clients that are in love with the property and they say, I don't care, I'm going to put another $5,000 down and we'll come in the middle and we'll reach an agreement. That's fine. We can negotiate all of that. Say it appraises. We're going to have a survey done in order to come to closing. A survey is, they measure the property. It makes sure that it shows where the easements are. Easements are areas that other people have the rights to go in. Usually they are utility easements. Somebody has to fix the utilities. They have the right to go on your property for that. But it also checks the garage next door is in your property. Those are huge things, because if that happens, we're going to have a problem, because you have a legal problem that you could have a battle, and I may say to you, look, you have to get out of this contract. It doesn't work, it doesn't work that way. The lender will say that too. That's why the lender wants a survey, okay? Mm-hmm. So we have the survey, and then the loan approval is another extremely important contingency, mm-hmm. because if by any chance something happens, like I mentioned before, something happened and they have to get out of the contract at the last minute before closing, and it's because the loan didn't approve, mm-hmm. that you get the $2,500 back as well, because the loan didn't approve. Now, say you pass inspection, it appraises correctly. In fact, it appraises higher. If it appraises higher, it's money in your pocket. You're buying it on sale, basically. The survey is fine, everything is fine, the loan gets approved, and a week before the closing, after the loan is approved, you say, you know what, I don't want the house anymore. You can still get out of the contract, but you lose the $2,500. Okay, that's what happens. Mm-hmm. Usually, if we get that far, you have already paid for the inspection. You have already paid for the appraisal. You have already paid for the survey. You have paid, application fees and all sorts of things. Unlikely that you're going to get out of the contract, but it has happened. It happened to me once that the couple that was buying the property. they actually started, they separated, and they ended up getting a divorce, and everything fell through. You know, they got out of the contract, they lost the money and everything, but you know, it is
Life happens.
Life happens.
Yeah.
So, and then, you know, after all that, then you go to the closing table. The closing table, you sign 1 million papers, and we give you the keys. The house is yours.
Yeah.
Everything up until that point, if the house is not yours, right before the closing, I'm gonna say we gotta go and do a walkthrough. We're gonna walk through the property. We're gonna make sure that everything is how you expected it to be. Nobody came in and took the washer and dryer that was supposed to be there. There wasn't a tornado the night before that took the house down. There's like, everything is how it's supposed to be. Then we're ready to go to closing. Now, up until that time, we can say, hey, no, we cannot close because we gotta fix this, or the washer and dryer are missing, or this or this. Perfect. The air conditioner, it turns out it was very hot when we get into the house. The air conditioner is not working. We have to delay the closing. Something is wrong. They are responsible, the sellers. Up until closing. The minute you get the keys, you sign all the papers, the house is yours. Don't call me the next day saying, the air conditioner.
It happened.
It happens more than you think.
Yeah.
It's life. So that happens. Now, that doesn't mean you cannot call me, and we'll figure something out. I mean, I have, you know, I will help you. I don't stop at that point. I will continue to help you. But the house is yours. You gotta understand that at that point, the house is yours.
The house is yours. Something really, within the process, like once the customer gets under contract, then that's when the clock starts clicking for me. And I usually lose like 3 days. That's what I was smiling when he said they get on the contract right when they sign. Because at that point, even though I don't have the contract yet, the clock starts ticking for me because we follow closing date, and that's a legal contract. So the bank have to make sure that we close on time. Of course, there are circumstances that you have to, you know, close few days after for, you know, X and Y, things happen. That's another process. You have to request extensions. We don't really target, you know, doing that. We don't like doing that. I don't think that's the norm for us. We are close on time. A lot of times I am ready to close actually before, but you know, the seller is still living on the house, so they are not ready to close until that day, whatever the case may be. But anyway, once you get under contract, then that's when I'm going to request all the formal documents from you, the official documents. And once I have those documents, then the file goes to processing. From processing goes to underwriting, and the file gets, you know, a conditional approval. When you get a conditional approval, my processor is going to email you, and he's going to tell you that, you know, congratulations, you have been conditionally approved, and the underwriter wants to verify this list of documents. And usually, you know, on my loans, I'm really proud of that. I try to really submit a complete file. So I do the work up front, so then when the conditional approval comes, unless the underwriter finds something that I didn't know about, it could happen. But, you know, mostly is not a lot of conditions. And I help you through that process as well. Then the file goes back to underwriting for what we call a clear to close. The day that I call you or I text you with all those, you know, little, how you call it, the goofy things that I send, you know, dancing or whatever, and I tell you, you are clear to close, that's the day you can be happy because I'm not going to ask for more documents. Now the file is going to the closing department. Now the closing department start talking again to the title company and doing what we call balancing the numbers. Now, before that happens, you're going to sign 3 days by law. Before you go into the closing table, you're going to sign what we call the closing disclosure. That's what it's called, the CD, closing disclosure. And at that point, the numbers are going to be even more real. That number should be the closest one. However, corrections still can be made. So I always tell the customer, don't worry so much about everything you have to sign before the closing table. Everything, like he said, can be fixed, corrected, until you sign those papers, wet sign on the closing table. Those are the ones that if you see a mistake in there or you have a question, I always tell them, call me if I'm not there. Let's see what's going on. Honestly, I don't remember happening. Yes, questions you can have, but I don't remember having to send a file back to underwriting, because then that will stop everything. So I don't remember things that big happening, but it could happen, and we can correct it. Okay, so until that time, it still can be corrected. And then at that point, like he said, then you're the owner.
That clear to close that's a happy moment.
Oh yeah, those are the sweet words.
Usually when she gets a clear to close, she sends me a text with 1 million happy emojis. Because you always do that. Yeah. We're clear to close, yeah! Because it is really big. It is a done deal at that point. Yeah. It's a done deal. So
it's a stressful process for the customer.
Trust me. Yeah. She's going to ask for so many things that you're going to say, you're going to call me and say, Sandra.
But I will hold your hand, though. I will hold your hand. I will explain to you. I will meet you if I have to. I will do whatever I need to do, and he knows that, to make sure you get to the closing table.
And once you get that closing disclosure, and the lender sends what the title company calls the package, that everything goes to them with all the numbers. And then the title company revises all the numbers, comes up with a paper that for some reason is completely different than the one the lender has, that has the same numbers in a different way, and then sends that paper to me with the final number of what you need to wire to them. That final number may take a little other things, like the HOA at this point had a request that, they had to, who knows what it is, but they made some adjustments. That adjusted number is, at that point, I say, hey, you got to wire this money. That's what you actually have to wire to the closing. You have to go to the bank and wire the money. It cannot be a check, not even a cashier check. It has to be a wire transfer, not the type that you do through the computer. You go to the bank and you ask them to do a wire transfer. Correct. Some banks allow it to the computer, but I usually say go to the bank. Yeah. You have wiring instructions. Those wiring instructions, the title company is going to get to you, or I'm going to get them to you. It's very important that you don't just get the wiring instructions from an email, because...
Not even from me. No. I don't send wiring instructions. That have to be the title company.
And the title company will not, most of them now will not even give you wiring instructions through email. Unless they have a secure portal, they usually tell you, come to the office and we'll give you wiring instructions. The reason is there is a lot of scams going on in which they spoof the emails, they pretend to be the title company or me or Sandra, and they send an email saying, hey, this is what you have to wire, these are the wiring instructions, and it's money going to somewhere else. Yeah. So know that. We're going to tell you 1 million times. And
the bank can actually, most banks are, because I used to be a banker, and they are supposed to verify those wiring instructions.
Yes, and some wiring instructions, what the title company will do is say, here's the wiring instructions, it's missing the last 4 digits of the account number. When you're there, call. And when you go to the bank, you have the banker call and say, verifying wiring instructions, give me the last 4 digits.
Correct.
So there's a lot of things that go on, but we're going further. We don't want to scare you.
Guys, if you want us to talk to you about some other subject that we didn't touch, because it's a lot, just put it in the comments. Let us know. What do you want us to share with you? And we can do a live, or we can do like we're doing, and you guys can have your questions answered. But give us a call. Don't keep waiting. If you give us a call, that is the first step to become a homeowner and to just, create that, healthy wealth for your family. I want to just say my number is 772-291-3476. I'm available mostly 24/7, almost, I think. I feel that way. It's my passion to help you. We have helped hundreds of families together. We work really well together. I love working with Ricardo. And when Ricardo calls me on a Sunday afternoon, that's a happy call. Because I know it's always on a Sunday afternoon while I'm in church, but that is a happy call. And I always know that, we're going to make that happen for that person. So.
Yeah, and I'll tell you, I say always on a Sunday because it does happen because we go to see houses on the weekend.
Yeah.
I work when you're not working because that's when it's not working hours, that's when I'm out there showing you houses.
Exactly.
So anyway, my number is 321-608-0400. That's our office number. You can reach me through that number. And thank you so much for watching and for being here. And
we hope that you call
all right.
and that you start this process.
Thank you so much.
Yeah, thank you.